morning everyone, and welcome to the Morrows Monthly update for November. In November we saw the US elections with President Obama being re-elected, although the outcome is somewhat mixed, with the Democrats retaining control of the Senate and the Republicans retaining control of the House of Reps. We also saw agreement in Europe on Greece's next bailout package. Global equity markets were mixed in November as concerns over the US fiscal cliff and general global debt still weighed on risk appetite. Japan's market rose strongly, around 6%, as the yen fell heavily, and we also saw gains of about 3% in Europe. The Aussie and the US markets were relatively flat, and the Chinese market was down about 2%. Bond markets, safe haven yields were relatively flat for the month, and we also saw the periphery yields in Europe fall as central banks continue to support these markets. On the commodities front, oil and gold were largely flat, and we did see those fall the prior month, so it was good to see them flat. Other industrial commodities were mixed. On the currency front, we saw the Aussie rise about 1% against the US dollar, and this was on continued bond buying by offshore central banks. Economic data out of the US was mixed in November, largely impacted by Hurricane Sandy, which also saw retail sales fall. On the positive though, manufacturing was better than expected, continued strength in the housing market was seen, unemployment was better than expected, and we saw consumer confidence hit a 4-year high. In Europe, they're now officially in a recession with 2 quarters of negative growth. We did see manufacturing strengthen slightly, although business and consumer confidence was weaker than expected. In China, manufacturing picked up, fixed asset investment picked up, and we also saw a strengthening in retail sales. Inflation's also at a 1.7% low, so there is room for policymakers to move if required. In Australia, we saw positive jobs growth with 11,000 jobs created, strong retail sales and stronger consumer confidence. The RBA cut interest rates by 25 basis points to 3%, which is now GFC lows. We do expect to see further rate cuts in 2013 on the back of lower global growth outlooks. November saw markets generally flat for the month. We continue to look for the annual Santa Claus rally to occur through December, and we expect this to occur particularly if we see a resolution to the US fiscal cliff before year end. However, if we don't see a resolution to the US fiscal cliff, we could see a sharp downturn in equity markets. And based on those risks, we continue to think capital preservation is the most important thing for portfolios and protecting downside risk. We will, however, look for opportunities that arise on both the upside and the downside. Thanks for your time today, and we look forward to talking to you next month.